Right. So I'm really pleased that Richard, who most of you here will know as LI's political education officer, has agreed to do more hands-on education. He does a very good line in this department. I think this is probably his fourth presentation himself in person to LI, or his third presentation, and
Third or fourth, yeah, somewhere,
yeah, and
somewhere
he's
in that range.
organised another one that he introduced and participated quite a bit in on AI. So he's agreed to do more hands-on by following up his initial very well received presentation on new directions in taxation with a very widely requested follow-up focused on equality in taxation. So I don't think I need to introduce him anymore. And I think all of you that were here at his first. So I think I'm just going to hand straight over to him so that we can get going. I've taken up 5 minutes rabbiting on about moving beds and books. So I think it's high time I let us get down to the major topic this evening, which is taxation. Over to you, Richard.
Thanks very much, Frankie. Yeah, and firstly, all credit to you, of course, for this was your idea to organize this session, and I just said yes to present it, so I
Of
don't deserve
course,
too much
and
credit
very
for
well said.
for speaking.
Very, it's a right word to say, yes. No isn't acceptable. No, seriously.
Exactly.
Carry on.
But yeah, so for today, well, I've done already a few sessions now on taxation with LI, and we of course did the budget digest at the end of last year when we spoke about taxation and some of the changes that were made to the tax regime in the UK at that time. As a follow-up to that, what we really wanted to focus on is taxation as a cool tool for inequality, or for addressing inequality first and
Yeah.
foremost. Now, obviously, there's a huge number of areas that you can go into when talking about inequality, but for this session, the one thing that I really want to very specifically address is the money raising side of the ledger. So not thinking about where taxation gets spent, but actually thinking first and foremost, where does it come from? Whose shoulders are bearing the weight of the costs incurred by taxation? How can we actually use taxation in and of itself as a tool for promoting inequality before we then come to consider how we actually spend that money? So to that end, I thought we'd do kind of a similar structure to what we've done in past sessions, that I can give a brief presentation. I've brought some slides with me, which I'll now share. And after that, I'd really love to open up the conversation for discussion, because I know certainly Tim and Valerie have lots of thoughts on this topic. And I think that's really the best thing that we can do, is get a conversation started and see if we can maybe think about putting together a motion in this area, or developing a common standpoint that we as Labour International want to put forward to the party as a whole. So I will ask you quickly, Frankie, are you able to see my screen? And hopefully everybody else can
Yes,
too.
I can. I can, and very smart it looks too, I must say.
Very good. Yeah, I found the official Labour red, so
I
it's
know the
all
red looked very familiar there. Yeah.
yeah,
Well
and the right
done.
font as well. They've got it's all in line
Even
with the
better,
funding
even
guide.
better. In step.
Exactly. So I want to open here with a very simple question. What is tax for? It sounds like a simple question. It's not in reality, because economists are a famously fickle bunch, and everybody has their own perspective on what the role of tax in society actually is. So if we would ask this man, the favorite of Labour members everywhere, Milton Friedman, he would say that tax is essentially there to fund essential services that the government provides, but really it's only taking productive money out of the private sector. It's fair to say this is not a great fan of tax. On the other side, we've got the Keynes philosophy, so Keynesian economics, which would argue that taxation can, of course, be used to fund government services, but it can also be used to dynamically cool overheated economies and also control inflation by draining excess demand. And on the other side, when tax cuts are required, they can also be used to stimulate demand during severe economic downturns. So for Keynes, taxation is much more a way to create stability within an economy and to balance out maybe some of the fluctuations between growth and downturns that any economy experiences. On the more modern side, we have economists like Mariana Mazzucato, who really advocates for a much more, yeah, I would say, proactive role of the state in terms of how the state can actually shape an economy, and she doesn't think about taxation as simply a way to correct occasional market failures, but she goes further and actually says that the state is a key figure in constructing the market in and of itself. So, in her view, if the state is a market shaper, then how taxation is used is not just a revenue mechanism, but it's also a structural tool to steer economic activity. So, in other words, where tax is, or crucially, where tax isn't, gives room for business and for the economy to thrive in those areas. And we can also use this on the other side to disincentivize activities like rent seeking. Capital gains tax is of course, a topic we'll come on to later in this regard. And then the probably most extreme or most unorthodox interpretation of what tax is for is from MMT, so modern monetary theory. This is the Richard Murphy perspective, Stephanie Kelton, and so on. And they would say that actually governments create their own money when they spend, and they destroy money when they tax. And therefore, theoretically, you could completely not tax anything at all, and government would still be able to spend. It's a bit of a strange concept, but this is the fundamental belief of the MMT philosophy. And in their view, if taxes are not there to raise money for the government, because they don't need to raise money in the first place, the role of tax looks very different. They see tax as being a mechanism, firstly, to control inflation. It's also a mechanism to give a currency its value, because if we're away from the gold standard, as we are since 1973, then the demand for a currency is actually created by a government accepting it in tax returns, according to this philosophy. It's also there, of course, to redistribute wealth. It can be used to reprice services. So if we think about things like the European carbon market, the CBAM and ETS market for carbon credits, this would be an example where modern monetary theory would say this is addressing negative externalities and pricing these in to goods and services in order to influence the economy. So this is kind of an overlap with the Mazzucato perspective as well. And now, having kind of outlined these extremely difficult to understand perspectives and largely kind of differing interpretations of what tax is even for, we can go on to look at the state of UK tax today. Now, the UK tax code is fairly infamous on the international comparison, because it's actually the longest in the world. It's over 20,000 pages long, and I think the estimation from the Institute for Fiscal Studies in the UK reckons that administrative friction alone consumes 0.5% of tax, 0.5% of GDP, in the UK as things stand. And there's been already 12 new taxes introduced simply since 2010, which many believe has contributed to increasing complexity in the system without necessarily making the system fairer or economically efficient. Now, if we look at the income tax curve in the UK, this is a graph taken from the FT, from the Financial Times. Above in blue, you have post-tax earnings. And then here we've got our childcare minus childcare expenses graph. This is quite a well-known graph and a well-known kind of symptom of the current state of the UK tax system, with this 62% effective tax rate for people earning above, or marginal tax rate, I should say, for people earning between 100 and 150,000. And additionally to this, the loss of childcare benefit, which means that people actually earning above 100k can be worse off than people earning 99k a year. This, of course, is symptomatic of the complexity of the tax code and kind of the very convoluted way the system has developed over the years. But you could also make the argument that actually this is, in a way, imperfect, but it's also progressive, because at least the burden is actually falling on high earners. Now, obviously, this drop here is problematic, but in the end, at least we're targeting the people who are earning the most money. And you could make the argument, okay, on paper, this is reasonably progressive. But income in and of itself that's earned by working is only one side of the story. Because if you look at the UK tax base, yes, income tax is relatively progressive. It's actually one of the most progressive tax systems in the world. When you look at income tax comparisons, we're very generous with the tax-free, what do you call it? The tax-free under £13,000 that you can earn in international comparisons. But the regressive reality is that people don't earn their money just through working. And in fact, the other ways of earning money in the UK are sufficiently or significantly lower taxed than work is. So if we look at things like capital gains, this is obviously the big offender. So this is gains that are made on the appreciation of capital, like houses or stocks, for example. This rate is significantly lower than income, and you don't need to lift a finger really to earn this. There's also, of course, dividend taxes, and recently now the landlord taxes that have been introduced for rental income, and these are also not on the same level as income tax, or at least in the case of landlord tax, they don't include national insurance, which of course is an extra top up if you're just earning as a normal employee. Additionally, there's VAT, and VAT is in itself a regressive tax because it's a flat rate that exists for every person who consumes anything. Well, not anything. There are a few caveats, like financial services, for example. But in essence, a rich person buying a kilogram of apples, let's say, is going to pay exactly the same rate of VAT as somebody who earns less than £20,000 a year. And so in this case, VAT is regressive and it's not progressive. You can actually see the numbers here in terms of what the differences look like for money earned from labor versus assets. And let's see, it's quite a big discrepancy. The example here, if you take an employee who would earn £125,000 a year, they are facing a combined marginal tax rate of 47%, so close to 50%, and that's combining your 45% income tax with a 2% national insurance. If you also then factor in the employer national insurance contributions, then that number gets even higher, and you effectively reach a top tax bracket on labor of 53.4%, which is very, very high. In contrast to that, if you're an individual who's making the same amount of money, so £153,000 on trading shares, you're paying a maximum of 20% in capital gains tax. And that can actually go even lower with the so-called business asset disposal relief. So if you're an entrepreneur, and if that capital gains is being made out of the sale of your own company, you then become eligible for this asset disposal relief, and the effective rate sinks to 10%, not 20%. So just to again reiterate that in contrast, we're talking about 53% effective taxation for an employee and potentially 10% for an entrepreneur. This obviously creates a massive structural bias, and it creates incentives for tax avoidance. Everybody wants to reclassify their incomes into these streams that are taxed lower, and therefore we undermine the foundational principle of tax equity in this way. Income tax taken for itself is progressive, but in the total tax landscape that exists in the UK, it is arguably not. So what do the parties want to do about this? Keir Starmer's and Labour's stance is probably not surprising. The party that's in government at the moment and that we all belong to essentially wants to focus on closing loopholes. They want to maintain the digital services tax, which is levied on the profits of mainly tech businesses that are active in the UK. And they don't really have any plans to introduce a wealth tax. Unsurprisingly, the Tories are also not much more adventurous, actually less adventurous. They want to cut the employee national insurance rates down to 2% and ultimately maintain the same rates. If we go a tick further, these are where the more dynamic and aggressive ideas are coming from at the moment, from the Liberal Democrats and the Greens. So Ed Davies has stated he'd like to raise the tax-free personal allowance, currently at around 13,000, which is, in international comparison, relatively generous. He also wants to raise the digital service tax from 6% up to 4%. So again, that's a tax levied on the profits of the largest tech companies, which are active in the UK. And most radically, he'd like to equalize capital gains tax and income tax. So that disparity that we just talked about of 10% and 53% would be closed with that policy. Zach Polanski from the Greens has suggested the same, and he'd even go further. He'd raise national insurance to 8% above 50k. This, again, a very weird quirk of how the national insurance system works. I think it's under 20k, you're paying 2%, and then the marginal rate goes up to 8% between 20 and 50k, and then back down to 2% beyond 50k. A very weird way of working. But the Greens would propose to raise this to 8% above 50,000 as well. He's also advocated for windfall taxes on energy and banks and expressed interest in wealth taxation, although there's no clear policy from the Greens on how exactly this would be implemented as of yet. So some quite differing perspectives from the major parties. And of course, there's one one party missing, which is quite prominent in the news in the UK at the moment, but I've left them out because I don't think they believe in economic policy. They don't seem to have much of it at all, and I don't think any of us are really interested in their opinion. So I hope I've not offended anybody by leaving them out. But on the subject of wealth taxes, and crucially creating more equality in the wealth in the tax system, what examples actually exist out in the world, and how successful have they been? Firstly, we've got the example of Norway. Norway is one of the European nations that does still have a wealth tax. The number of them is decreasing year for year, which some could argue is a result of globalization. It's this race to the bottom, which we've seen, also reflected in corporation tax rates. The current state wealth tax rate is 1.1% on the highest fortunes, and this is applied to assets above 20 million Norwegian, I think it's kroners, I'm not quite sure how you pronounce it, for individuals. Interestingly, and I think this is a nice kind of parallel to what we saw in the UK recently, this was very heavily criticized in the Norwegian press, specifically because they pointed out that this would lead to a mass exodus of wealthy individuals and thus damage the Norwegian economy. Later, it came out that this was not true. This was panic basically pushed by the financial press. And I think it was research from the Tax Justice Network that found the actual migration rate for Norwegian millionaires in response to the tax was near 0.2%, which was statistically consistent with historical averages. In addition to that, the official data from the government, so Statistics Norway in this case, indicates that aggregate wealth tax revenues actually increased from 26 billion, so again, Norwegian kroners, to 29 billion when this policy was implemented, and reached 34 billion in 2025. Now, I think this is interesting because, of course, we saw last year when the budget came in, there was lots of stories, especially around the closing of the non-dom loophole about a tax exodus in the UK. And I think many of us harbored the suspicion that maybe this is a narrative that's being fed by lobbyists, but I think it's interesting to see that this is not a unique phenomenon to the UK, but actually has played out and does play out in other places, but that research shows that this is not always as true as some publications would have us believe. Then moving on to France. Moving on to France. So France had statistically a very broad wealth tax from 1989 to 2017. I'll try to pronounce this with my very limited French. So it was the impôt de solidarité sur la fortune. So I guess the tax of solidarity on wealth, which was raising, basically applied to global assets that exceeded 1.3 million euros. This was then switched in 2017 to a tax that was only focusing on property above this value. So tax global stocks were then not falling into this bracket anymore, and only property. And the argument was that these are essentially assets that really can't be taken abroad, and therefore it makes sense to tax these, whereas stocks could theoretically be taxed elsewhere, and therefore it could lead to people leaving. So there was concerns around capital flight, essentially, that led to this change in policy under the Macron government. And I think this is something that is, again, a trend that has been seen in other European countries, that wealth taxes are increasingly seen as something that drives people leaving the country, that disincentivizes investment, and thus they have been scrapped in recent years wherever they have existed. Interestingly, there has been other measures to essentially further incentivize domestic financial investment. with flat taxes on capital income, which basically aims to halt the outflow of capital out of the country and put more local savings into productive corporate investments. So I think this is actually a policy that we also see now the Labour government pursuing in the UK, with changes to the ISA schemes, for example, trying to encourage people to not invest in real estate, where we've actually seen tax increases historically, but trying to create tax windows for people to invest domestically in stocks, and then also controlling the outflows simultaneously. And then one final example I would take is Switzerland, which I also mentioned in one of the previous sessions. They have a canton-based wealth tax. So it's not a federal wealth tax because Switzerland is a federation. It's done on a canton base. And all 26 cantons are actually constitutionally required to levy an annual comprehensive wealth tax, while also kind of having autonomy over how that actually functions in practice and how it's designed. They have a very broad tax base, but of course the rates are fairly moderate compared to international examples, and the thresholds then are quite low, which means quite a large segment of the Swiss population are actively paying the tax. The empirical evidence around the behavioral effect of these taxes is in one direction. So the research suggests that a 1 percentage point drop in a specific canton's wealth tax increases the reported taxable wealth in that region by at least 43% over a 6-year period. So the economists reckon this is not primarily attributed to new savings, but it's actually mostly by evasion responses. So people who are basically looking to reduce their tax bill and shift their primary residence to somewhere where they won't be taxed as highly as where they might actually be living. So that's the current picture. Overall, I think main stories around wealth taxes are they cause capital flight. How reliable this narrative is, I think we are right to call into question. And then I think in terms of the actual policy design of how these have exist in different countries, the question is whether it should be levied on everything, whether it's specifically targeted towards property, and then if wealth taxes also need to go in hand with capital controls to ensure that you don't have capital outflows on the other side. I then wanted to come on to some of the proposals that Richard Murphy raised in his reporting, and that Tim and Valerie very kindly forwarded to me previously. So I've just wanted to highlight 4 of them. I know there was many different points that he raised, but the first of those was equalizing capital gains tax with income tax. So something that the Lib Dems and Greens are both advocating at the moment. This, if implemented, would be projected to raise, according to Richard Murphy, £12 billion per annum for the UK Exchequer. There is, of course, questions over whether this is actually the number that would be realized. And essentially, the argument against it is that this change would severely discourage entrepreneurship, because anybody who's thinking to take the risk to start a business will say, okay, well, I'm just as safe earning 100,000 and getting taxed the same amount in my business as I am working. So why would I bother starting the business? And there is also this argument of a so-called lock-in effect, where investors will essentially refuse to sell assets to avoid taxation. And this is, I think, an interesting topic that's worth coming back to as well, because this is essentially one of the big mechanisms that very, very wealthy people use to spend their money. They don't sell their assets, but they take out loans against it. And of course, loans are very difficult to tax, because they're not really income in the traditional sense. And so as a result, what mostly happens with very rich billionaires is that they'll use their assets, their stocks, their property portfolio as the safety, the ballast against their loan, and then just spend the loan money, which banks don't really ever expect them to pay back because the interest rates are so low, because they're considered such a safe investor. So the concern is that actually by equalizing capital gains tax with income tax, you encourage this behavior, because you're actually saying to rich people, you're going to be charged and have to pay tax on those assets when you sell them, so maybe don't sell them. Again, it's hard to know how real this concern really is. Then 15% investment income surcharge. So this would be a flat 15% surcharge on all unearned income, which includes then interest, dividends, rents, capital gains. And there would then be, I think, if I remember correctly, a nominal allowance of £5,000 or £6,000, under which this tax then wouldn't be applied. The projection is this would raise an estimated £18 billion per annum, and ideally should equalize out the lack of national insurance contributions for people who are not earning their income through work, because national insurance is only charged on labor, essentially. The primary argument against this is, again, capital flight. So if we do this, we'd be arguably encouraging people to relocate their liquid capital to places that are more favorable jurisdictions. Again, it's a mixed picture on how realistic that actually is. Charging VAT on financial services. So currently financial services are exempt from VAT. Richard Murphy makes the point that essentially the very wealthiest are benefiting from these services. Why don't we actually charge VAT on them? I mean, this is another example of where VAT is maybe regressive, that it's not being charged on something like this. The primary counter argument is that the costs would just end up being passed on to consumers. So they wouldn't necessarily be digging into the bank's profit margins, just being passed on, and result in more expensive mortgages, for example, more expensive loans from banks. And the other aspect that is used to counter this is the idea of administrative complexity and questions about how do you really quantify the added value of a mortgage, for example. Again, it's not clear how this could be solved, but it's certainly an interesting topic. And lastly, the idea of investing a lot of money, £1 billion, to close the corporation tax gap, essentially enforcement for HMRC. And the estimate from Richard Murphy is that £12 billion of corporation tax are currently not being effectively collected. And by doing this, we could actually enforce the rule of law and making sure that we do get that money, essentially. There is broad political consensus of this. Of course, nobody really likes big corporations avoiding tax. And the main argument against this is, firstly, it would take a long time. Even if you would invest this money, you're not going to get that 12 billion overnight. It will take years. You also need, of course, time to train up the new people that can actually do this. So the question is how long the overall enforcement would take. And the other counter argument is around the assertion that £12 billion of tax is actually unpaid. HMRC's own official estimates are significantly lower. It's around 30% of that figure, so 4 times as little. And that, of course, then calls into question the return on investment of whether that makes sense or not. But again, just some of the ideas, and I think it'd be nice to kind of discuss around these. Just to kind of wrap up, there's obviously 2 sides to thinking about wealth taxes. There is what can you raise financially, and I think this is something that, if compared to income tax, you're never going to get as much money from a wealth tax as you would from the very broad-based taxes which affect the middle class and working class as well. But I would personally say that the reason for wealth tax is not just about raising money for government, but it's also a moral imperative. It's an imperative that we show that people are treated fairly, that those with the broadest shoulders essentially bear the highest burden, and that this is not just good for raising extra money for government, but it's actually healthy for a society, that we have this sense of moral responsibility built into our system, whereby those who make money should be encouraged and should be obligated to give something back to society. The other question, and I think the other side of it, to take the more pessimistic, real political stance, is just how easy is it to create wealth taxes on our own? We know how the UK media is. It will be very hostile. The results are disputed. It's very hard to know exactly how much tax could really be collected, what, if any, capital flight there would be. And the other part is, of course, the internationalization of wealth. We don't live in a lone island economy. We live in a very globalized world, and much of UK wealth is also held internationally. And the question then of enforcement on this, of making sure that that's accurately reported to HMRC, is potentially a very expensive problem to solve. And again, ROI, does it make sense? Again, I think this is a kind of cynical view. And personally, I would see it as a moral imperative, but this would be the kind of other side of the coin. On global cooperation, this is obviously something that's already been looked at with corporation tax. introducing the 15% global minimum corporate tax rate, interlocking rules to make sure that every country upholds this rate and also can have the opportunity to top up taxes where people are undercharged, which should ideally prevent this idea of the race to the bottom. My thinking would be, if you really want to have effective wealth taxes in a globalized economy, you again need to think about international cooperation and how you can implement this with partners in order to make sure that people don't slip through the net and they don't have the possibility to sneak off to Monaco and shift all of their assets there without having to pay a dime on them. Again, how possible this is to do, I think that's a very big question, but looking forward to the discussion on it. And just to kind of finally wrap up with a brief conclusion, and again, these are kind of my opinions on this. Taxation is essentially a fundamental choice about what world we want to live in, about what society we want to build. It's not just about how we raise money, but it's about how we treat individuals within our society and who we believe should bear the burden of building a better future. Domestic reform obviously should do more to address the imbalance between capital and labor. I think this is probably one of the biggest things that we are facing at the moment, and we've seen, since 2008, really how a focus on tax relief for capital-based incomes has led to accusations of a rentier economy, right? So landlords who are quite easily able to extract a lot of wealth from assets, but are not necessarily investing productive capital. And of course, the idea that if we really want to make sure we have control of our economy and we control who we are taxing and how we are taxing them in a globalized world, that needs international cooperation. And I think probably, as everyone in this room, I guess, would support being Labour International, closer cooperation with Europe, of course, closer cooperation with other international partners to make sure that we don't let people slip through the net. Very, very finally, and the absolute last slide that I have, I think the tide is slowly turning on this. So even The Economist, this was one of the articles that they had a few weeks ago, where they actually disputed one of their own columns, saying that basically tax was getting too progressive. They then disputed this a week later, essentially arguing for a wealth tax as well. Now, I think this, of course, is from a guest writer, so it's not necessarily the view of the publication, but I do think that there is a very slow shift in perception happening at the moment in terms of what the mainstream view is on wealth taxation. Obviously, on the further left, it's going a lot further and advocating for things like equalizing capital gains. But even in the center, and I think the soft right, I would say, there is, I think, increasingly a view that there is a problem with the current system, and that actually the reduction of corporation tax rates in the past 30 years, the encouragement of rent-seeking behaviors is increasingly becoming a problem. That's reflected in house prices, that's reflected in wealth inequalities, that's actually robbing our countries of productivity. Because we also know, of course, that middle-class people generally spend more of their money than very rich people do, who like to just hoard it. So I'm not super pessimistic that we can do something on wealth taxes. Of course, I think it's an extremely difficult political battle that we would have to win. And I think there's big questions in terms of what is possible, what is in the realm of the doable things that we can actually reasonably implement in a globalized world. And I think first and foremost, the one thing that I would strongly believe in is that any measures that we do take, we should strive as far as possible not to do them alone. We should strive to do them with partners and make sure we set up standards that every country is beholden to, so that we can prevent tax avoidance issues. Again, that's a very hard political fight, but I think one that's worth engaging with. So at that point, I have finished my slides in just under 40 minutes. And I will go back to Zoom if I can find it. I've lost you all now.
Right. Yeah. Well, I think I have to say something. I'm not muted, am I? You can hear me? Okay.
We can hear you.
That was so amazing. We just kind of cascaded from one flow of information about one set of views to another. Every time I don't know how many questions we're going to get because we could get masses because there were masses to ask about, or or people could be as stymied as I am because every time I started to jot down a question, we went on to something else that was equally interesting. So I've got a whole host of part written questions, and I'm hoping I can't actually, I haven't got a full screen. And I think I need a full screen in order to actually see this. I don't want to sign myself out by hitting the wrong button.
can see Richard's got a hand up.
Richard, which one?
Richard, well, not me, the other one.
No, there's three of you.
Is there? There's three of
There's
us. Richard
Richard
Brinton.
Marks, Richard Brinton, and Richard Williams here this evening.
Yeah, it's Brinton who's got his hand
Richard
up.
Brinton, sounds great. Off you go, Richard.
Right. Just a couple of things. One that I'd kind of thought about general taxation. And one, I'll do the comment first. What is tax for? I think, Richard, you forgot history, and it's very it's very particular to our present time. But it was I believe it was originally to finance war. And I wouldn't be surprised if America starts trying to turn screws more because of the what they're spending on war. Anyway, that's a bit of an aside. The one thing is it's so complex. I mean, there are so many aspects of this. I'm sure tax should be progressive, and the one thing I've often thought about with the UK tax system is that there are cliff edges with the bands, and there are four or three bands in the basic rate, higher rate, and additional rate, or something like that. I just as an experiment, I once sort of thought, well, how could that be done differently? And I came up with about 7 bands, and I think with computers and maybe AI, it's got to be quite simple to get rid of cliff edges, and for people to feel that, oh, if I accept this pay rise, I'm going to start paying I don't know how much tax. That's rather incentivizing, I think, and if that's something I would like to see. All the other points you made about CGT and so on. I'm not sure. I don't know the arguments well enough, and but I would like to see. It could actually be infinite progression with computer systems where there are no cliff edges. I think that would be good to for it to disappear. Okay, that was my point.
Do we just want to go further? I think.
Thank you very much, Richard. Do you want to respond on that, Richard?
I can briefly say I agree. I think it's right. I think the cliff edges are very weird, and it's not like that in Germany. We have a curve in Germany, so every euro is taxed slightly higher, and I don't see there's any reason why you couldn't do something similar in the UK. I think it's really probably just a matter of it's a very big project to take on, and it would be hard to know what revenues you would get out of it at the end of it. So I don't think that it's been something that government has historically been inclined to do. But I agree with you that the cliff edges are a big problem. And actually, if you look where the tax burden falls at the moment on which people, I think right at the bottom of British society, as I say, we've got a very generous personal allowance, £13,000, which is higher than a lot of countries. Then as you go up, you get to quite a high tax burden actually for your kind of working middle class and the aspirational middle class. And then it drops off a cliff again when you get to the entrepreneurs and the most rich in society. Mm-hmm. And I think that's a problem for productive investment. Obviously, we need to make sure that the worst off in society have dignity. They have are able to get into work, but they've also got support that they need. But you also need to make sure that people who, want to get on in life, to use that Tory phrase, actually have the opportunity and the incentives to do that. And I think that's what I agree with you. That's currently a problem with the cliff edge system.
Yeah, I mean that is currently well, it's not currently, it is a perennial problem of attempts to kind of promote equality within any economic system by any means. That you need to reward incentive to an extent, and you also need to compensate for inequality. And they are very difficult areas where whatever way you turn, they're very hard to balance. I I would like it if we could do this, if we could continue like this, and you could respond to different people's questions as they come up. Because as I said, I was kind of cascading from one, kind of rich lot of information to another. And and I think rather than do the same here and have people's responses and questions forgotten, we should do it one at a time like this, if that's okay with you. And with people asking questions. Now, I've got a slight problem here because Steve, I believe you've got your hand up. Nod if that's true. Okay, and I don't know who came first, you or Tim, or Valerie. And if it was you, Steve, was it?
Yeah, I've got to go in about 5-10 minutes, so I wouldn't mind
That's
having a go at it
absolutely
now.
fine by me. I'm going to declare you DI and give it to you, Steve. Is that all right?
Okay. Yeah, I mean, it seems to me, I don't know what you feel about this, Richard. I mean, I take the one about moral imperative and the effects of extreme wealth on democracy, and also what you're saying about incentivizing at the middle ranges. But surely the main objective of a socialist government is to be able to create opportunities for people through things like Sure Start education, regional investment to bring back up the economic potential of parts of the country that have become structurally disadvantaged. And actually, it's raising money in order to pay for that, which has to be what's in mind. And of course, the main way of increasing tax take through income tax, as you point out, is through a bigger economy. The more money that people earn, the more they pay, the more the government can spend on Sure Start centres and the rest. And really, I know it's awfully difficult to kind of to ignore it, but I think other things have to take a second place to that objective. That's my view, and obviously that has implications for the way that you do structure your tax system. I'm not an advocate of Laffer curves and all of that sort of thing. I mean, I do think you can tax people and they're going to pay more, and I don't think they're all. I think it was the Institute of Government that said that what you should really do is jump in there with a good sized wealth tax straight away when nobody's watching and they can't run off to Monaco too quickly, and then make sure everybody knows you're not going to do it again. But it is actually raising the cash that's, in my view, which is the socialist imperative because of what we can do with it.
Yeah. I mean, I think it's a very good point, Steve. I tried, and I think, according to Frankie, probably failed to try to keep the focus relatively sharp for this session, because I just wanted to look at how taxes are raised and not necessarily what we do with them. I do, of course, agree with you that that is the most important thing for a socialist government, that we do work to redistribute and give people chances. I think that's entirely correct. And yeah, with your points around growth, I agree with you. If we had done a session on how taxation can be used to simulate growth, then I think I would have also raised some different points. I tried to focus for today on specifically inequality and how taxation can be used to steer that. But I take all of your points, and I think that's everything is very valid there. Regarding whether it should take a back seat to those other objectives or not, I think it's an interesting philosophical question, right? And there's probably I don't think any of us will agree with that on that in this round probably. And it's difficult to say. I mean, the thing is with growth is if it works and you really do get the extra money, then everybody's happy. But the question is then, okay, what happens when it doesn't work? And it hasn't worked in the UK for 15 years. And I think that's why we see now more of these conversations, because we don't have the revenue to support the social programs that we want as a Labour government to be able to bring about. But very good points. Thank you.
Okay. Thank you very much for Steve for that. And now I am going to go to Tim and/or Valerie.
It's both of us.
It might be.
Yes, Tweedledum and Tweedledee. Yeah.
Indeed.
Thank you very much, Richard. This is really informative, and you've designed your presentation extremely well to give people openings. Thank you. I really appreciate it. But I do have questions to ask, obviously. And I'm assuming that since you live in Germany and work in Germany, you know the work of Wolfgang Streeck. And if you do, then you will know his very good British friend, Colin Crouch. And they have many conversations together, both economists. And Wolfgang Streeck has a book which he updated in 2020 called Buying Time. And the history of the book, deals with the history of the financial world trying to develop financial systems that make more money for the wealthy and that everybody else will be fine. And at the end of 10 or 15 years, they see that the people who aren't wealthy, as you are saying, have become extremely poor, can't manage. And so that they come up with a new system to try and address that. And that this has been the programme for the financial system since the 60s, really, until today. And now we're in an absolute crisis in most Western countries. We're not actually talking about countries in other parts of the world where there is extreme wealth and extreme poverty. And Britain is, and I'm suggesting or asking you whether you think that Britain can be treated in isolation from that trajectory, because I don't see it happening. I often remind people when I can, especially Tim, endlessly, that when Starmer first became leader of the party, he wrote this 14,000-word document about how he believed that the private sector was the only sector that would really save Britain, and that Britain had to team up with the private sector, which of course means that if you team up with the private sector, which is mostly international, most of the money they make leaves the country. And Starmer doesn't seem to have, he doesn't seem willing to solve that problem. And of course, he's trapped, and Reeves are trapped, because the global wealth operates at a stratospheric sphere that none of us have any idea about its operations, nor does Starmer. We're all victims of it. And therefore, for any country to insert itself and demand that they can do something for their people, especially their people who are less well off, that goes against the inclinations and drives of the wealth, I'm talking about the extremely wealthy, like the global corporations who in fact own the world now. How does a government like the Labour government actually interject and manage that enormous problem? Because they have so little power. That's my problem. I mean, it's my problem with Richard Murphy, for example. What can you do at the, and I'm saying local, I mean national level, to address that, apart from maybe a land tax in Britain? That's the only solution I can see, because people can't move their land. You know, people do move their you know, Britain is the queen of the paradis fiscaux. It absolutely is. It owns more of them than any other country. So moving money and operating money in other dominions is very easy for the wealthy British. So are there other systems that can be used, like land tax, which is static actually, to deal with this problem? Thank you.
Thank you, Valerie.
Well,
I mean, I think
all I heard was Valerie and not Tim.
But I mean, a very, very good
Richard.
points. I think, yeah, Valerie, I mean, firstly, I'm not, I'm not an expert on any of this. I'm just interested in it as you are. But yeah, I do know of Wolfgang Streeck. I've read some of his pieces before, but not his books. I think it's a good point. And actually, I think if you read also some of the literature from the kind of other sides, the Silicon Valley billionaires, it's also kind of the world that they actively want to build towards. You know, this weakening of the nation state, making sure that they're not in the position to raise taxes effectively. It's not just an accident; it's a stated objective that they want in the world that they want to bring about. On the land tax idea, I think it's very interesting. I think actually when I was researching for this presentation and putting it together, I found a quote from Milton Friedman, who was on my first slide, and he even described land tax as the least bad tax. So, you know, if Milton Friedman can get on board with it, I think that's fair enough to say that Labour should be able to as well. Yeah, because like you say, it's essentially nothing to do with productivity or not. It's to do with asset hoarding, really. I don't know how effective it could be internationally, because I think also if you look at now how the real kind of robber barons of our age, the tech titans, make their money, how much footprint do they really have in the UK? It's still possible to extract you know, a tremendous amount of wealth from our economy without necessarily having any presence whatsoever.
Yeah.
So that would be one thing that I'd think about. Honestly, I think it's a really difficult problem to solve. It's a really, really difficult problem to solve. And honestly, if I would have the answer, I think hopefully I would have already been hired and working in government. So.
You'd be very rich too, Richard.
Yeah, exactly.
And then we'd have to work out how to tax you, Richard, because you'd be so affluent. Can I just interject one thing, and then Tim, are you poised to come in then, Tim?
Yes.
Okay, I was just going to say, Richard, that in your first presentation on tax, I recall you did talk about how to actually tax wealthy mobile people, and not least with an exodus tax, which I kind of thought as being the tax of last resort, you know, when they're actually going out the door. And then there are others that you can get into earlier on processes. Rather than actual capital assets necessarily, though they probably involve capital assets. So I don't know. I think that was my thought when Valerie was talking about land taxes. You know, because of course that brings us to another tax inequality, which is local taxes, which are, you know, predicated upon property values, which are not accurate. Anyway, I've had my tuppence worth now, as my dad would have said. I'm coming over to you now, Tim.
Okay, great. Thanks, Frankie. And thank you, Richard, for a great spin round the kaleidoscope, unusual amount of richness and array of perspectives, you know, brought together. And it's very helpful to our members of our branch who recently said everyone attending in a meeting said they all wanted to tackle wealth tax as a big issue next, and they knew it wasn't going to be easy, and they have different reasons for wanting to tax it, some of which didn't have anything particular to do with raising revenue, but fell into what you put up under your moral considerations, which actually are of at least three or four, maybe more different sorts. Anyway, that's not my question. My question follows on directly from what Frankie and Valerie have raised, which is, Richard, do you, in the course of preparing for this or in your other wider experience, do you see, in terms of the issues you've raised, that there are interestingly different approaches or degrees of success in relation to these issues, differences between jurisdictions according to how they treat where their citizens live? You know, most countries have a provision for taxing citizens differently, whether they're resident or non-resident, and tax treaties between different jurisdictions incorporate principles about residents that have been, in relation to different aspects of income, for example, that have been negotiated and revised over various years. But in terms of, we know that Britain's a highly internationalized economy in certain ways, in financial and commercial ways, while actually being quite insular in other ways. The United States has a provision, USA has a provision, has had for some time provisions whereby it doesn't matter where you live in the world, if you're an American citizen, or where your income comes from, or what your income comes from, you are in all cases subject to US tax. And if you want to then argue that you shouldn't pay this or that US tax because you really owe that to some prior right of taxation elsewhere under dual, avoidance of double taxation treaties, then you have to go through with them in their system the ways that I know this because I'm an American citizen still, as well as a British one, that you have to deal with those technicalities, which means they have to have a system, an ordinary tax declaration system, which incorporates those things for everyone, not just for a few people. But the claim it's sometimes claimed that because the Americans tax American income and assets in some respects, wherever they're held in the world, and can treat them differently according to where they're held. And the whole business of capital flight, the question is really, does that arise, capital flight and personal flight, to avoid tax, does that arise differently in jurisdictions like the US, which tax you all over the world, or certainly try to?
Yeah, it's a very big question. Actually, so when I was researching it, that was the only example I'd really looked into, where there is such a big difference in how citizens are treated living abroad. The US, right, that they do have this, I think, quite rare system of taxing their citizens even when they're not in the country. It's interesting, and I think one of the things that allows it to work is the fact that it's also tied to the exit tax. So if you decide to give up your US passport, then there's another tax where you've got to, I can't remember what percentage it is now, but you've got to pay a tax on your unrealized gains from assets that you hold. So there's an incentive to not give up your US passport. Whether the UK could do the same, I think, is a really difficult question. So one of the things that came up actually as Imogen and I were testifying last week to the committee on the representation of the people bill, so about voters abroad, was the fact that the UK government doesn't have a single collection of names or a list of citizens that are living abroad. We don't have a shared database for this. So you firstly need to create the database. You then need to have the enforcement structures in place for it, of course, which is all difficult to set up. The other thing is then, of course, how do you actually prevent people from just saying, okay, I'll give up my British passport? At the moment, the US passport is worth keeping, especially for people who have a lot of assets, because it provides you with market access. Right? If you've got the US passport, you've got access to the biggest, deepest capital markets in the world. The UK doesn't have that same privileged position. So I think that's much more of a concern. How do we prevent people from actually just saying, okay, I don't want to have my UK passport anymore? And even if you did do the same on assets, I think then again that people could easily just revoke their citizenship very early on before they'd even build their business, because again, in the UK, you've got the possibility to stay in the country on an Irish passport, for example, with no exceptions. So I would be interested to see if it could work. I think it would be difficult for the UK because we don't have the same privileged position as the US in terms of the strength of the citizenship. But yeah, it's worth exploring. I mean, the other thing is, of course, that the US population abroad is massive, and the UK is a smaller country. But realistically, you would need just as many enforcers to be in every single country to make sure that things are being done properly. So it might be a cost ratio that works for the US, but might not necessarily work for us. I don't know. That's just kind of speculation. But yeah, it's an interesting question. And of course, you could discourage from people from going to Monaco, Dubai, those places where we see hundreds of thousands of Brits abroad live now, and many of them earning well but not being taxed. So yeah, it's they've profited from our education system and the taxpayers' money growing up and then not paid anything back. So I think there's an argument to look into it. I don't know how feasible it is, and to be honest, I only saw the US example, and I think they profit from their privilege as being such a strong economy, especially for investors, that allows them to do it. I don't know how feasible it would be for the UK, but it's an interesting point.
Thanks. Just one thing to mention in relation to that, and which connects with the exit tax, their exit tax provisions, which you mentioned, is that if you currently people who do decide to resile their American citizenship are still subject to, under American law, to tax liability, including exit tax, for 10 years afterwards.
Like Boris Johnson. Boris Johnson did this, yeah.
Yeah. So that's a dimension which is, the Americans have set it up so you can't just switch off the lights.
That's really interesting. Okay, I didn't know that.
That's a very interesting postscript there, Tim. Yeah, they are relentless and they're going to get their woman or man, whichever. Okay, I'm going to go to the long-suffering Tracy, who looks as if she's feeling a little sleepy lying back in her chair there, waiting to come in with her question. I'm sorry to have kept you so long.
No.
Over to you.
I know this is about revenue making, but I don't think you can discuss creating wealth without talking about benefits, especially in the UK, because it seems that as a country, we take it in with one hand and give it out with the other. And we say we're giving it to the individuals, we're giving it to parents, we're giving it to people who are working family tax credit particularly. But in fact, I think personally, it's a taxation on or a benefit for the companies because they don't have to pay a living wage. We allow them to be able to pay money to people. Zero contract hours is one thing which they've got here, which works fine here because there's never. I was so worried when my son got a zero contract hour job as a student, and I didn't have anything to worry about. It worked perfectly for everybody because he worked in a cinema, and in the summer He worked more hours because he wasn't at college. But at the same time, the cinema was busier because nobody was at school and colleges were full, so people went to the cinema more. Also, I live in California, it's hot. They went for the air conditioning. But when term time was on, he could work round his hours. It worked brilliantly. Whereas in England, it was much more, as usual, we take the American idea and misuse it. It was much more used for, well, you can't work anywhere else, you can't do anything else, but you might not get a job for 3 weeks, any hours.
Yeah.
And I think we need to think about how we get out of this benefits hole that we're in as a country, where we're just giving out money to everybody. Everybody's on some form of benefit now in the UK, or very many people are on some form of benefit, and each think that their own benefit mustn't be cut, but that benefits generally should be cut. So I don't know if that's another discussion, but I definitely have strong views on having a family that a lot of my family members are on benefits, and for one reason or another. I come from a deprived area in Newcastle. I come from a very working class family, high unemployment in the family still. And I know they know how to play the system too. They've learned how to do that. Generations have done that. So that I'll leave it there. That's my point. My point is, can you really discuss creating wealth through taxation if you're then going to give it back to the companies in terms of benefits to the people who are employed by them?
Well, I certainly have a lot to say about that. I'm going to hand over to you quickly, Richard, before I start, interjecting.
I actually just had one question for Tracy. I'm not sure if this is correct, but is it in the US where you get tax credits if you're below a certain income threshold? So you kind of have a reverse income tax? Or have I got that confused?
I don't know anything about that because we're not at that end of the scale, I think, and I haven't looked into it. I don't know. I don't know.
Okay. Well,
I don't know a lot about tax. Steve does the taxes. He's the money guy.
Richard? Richard, do you not have a response?
Go ahead, Frankie. No, I don't have a response.
No, I was just going to say, I mean,
Chicken.
this is right. I walked into that one. Yeah, I was just going to say that this is part of the entire system. This is how the welfare state operates, because it takes in money and not enough of it. It doesn't take enough money in, and it pays too much money out to compensate for private enterprises' actions. And it doesn't just do that in terms of benefits, because it doesn't pay, because the private sector doesn't always pay people enough money. It also does it in terms of picking up the costs of the mess they make. Global warming would be an obvious thing for the convener of UK to Zero to mention. But the health service picks up the cost of people not being able to afford to eat properly, not being able to breathe clean air, working with hazardous substances, working near to or living near to farms who are using chemicals and pesticides. It picks up these costs everywhere. I mean, there used to be a huge concentration of cancer near to the steelworks in Sheffield, for example. My husband has Parkinson's, and he was brought up near to a factory. He went to school opposite a factory where they discharged chemical effluents emissions into the air that are now very strongly linked to Parkinson's disease and other neurological conditions. So the state does this all the time. It doesn't just do it to benefits. And whilst I know it's easy to comment on people who can manipulate the system, a lot of people I don't blame for manipulating the system.
Well, I don't either, no.
I mean, I used to one of my mother's neighbours always used to say that these people who get benefits, do you know they actually have televisions? And I thought, well, how dare they be part of, the normal day-to-day existence of people's lives. So this isn't a criticism of your comments at all. It's to say that this is a broad problem, and that is why we need to get companies either contributing or paying for the damage they do, or we need to stop them doing it, because all that's happening is it's the welfare state that gets the blame for not picking up the tab properly, without people actually thinking that it's a tab they're picking up. Now people here might think that's a very biased view, but there we are. I put it on the line. It isn't an answer, but I think it's something that we ought to talk about a lot more than we do, because, we have a situation where our government isn't getting enough money because it applies so many fiscal restraints, and it can't break out of them, and it can't generate the income and the money it needs in order to cause the problems that it's got. And we hope that they would like to put more money into solving those problems, despite Starmer's document that Valerie's research has winkled out about the private sector saving the world. I don't think it does. So that's an idea that we need to challenge somewhere along in my book, and so that's my only comment, really. That I think it's a far more generic problem that we have to solve and we have to address in economic terms, in a sort of socialist populism, really, if you like. That's what we need to develop. I'm not going to rabbit on anymore, because Belen's now been waiting a long time. That didn't solve your problem, but it did sort of put it in a broader context, which is about public expenditure, which might be why Richard's got his hand up now, because I know it's a nectar to a bee, that. Okay, so I'm going to go over to Belen, and then we'll see what Richard has to say in a bit. Belen.
Yeah, Richard, thank you. I've really enjoyed the talk. Actually, you reminded me of one of my economic professors when he was teaching us taxation, but I think you explained it better. I can say that. That's painful. I just want to ask about the type of the market, how that affects. As you know, many UK industries are oligopolies. Does this reduce the effectiveness of taxation as a tool to promote equality?
That's a good question, and
Sorry.
probably I'm not qualified to answer it. Probably, the honest answer is I don't know, but I can imagine yes. But if anybody else knows, then please come and rescue me.
Okay, sorry. I think my from your topic, but I think there's a direct link between the taxation system and the type of the market. That's why I need to understand that, especially in the UK market.
Yeah.
Let's switch to that another Richard.
All eyes are on you, Richard. The spotlight. No, Richard Williams. The spotlight's on Richard Williams.
I've got to come up with an answer to that one. I mean, as I say, I'm not. I can imagine it would, because of course, these very large international companies, which are also part of these oligopolies, as you rightly mentioned, in the UK, have much more wiggle room to potentially set up tax structures that means they end up paying less, because they just have more resources available to them. I think, generally speaking, more competition, more innovation, you would think that creates, of course, more jobs, and that's, of course, more opportunities for taxation. But I don't have empirical evidence, or I haven't looked specifically into the topic. I can imagine there is a link, but I'm honestly not sure how it might actually look like. I don't know enough about it, to be honest.
Well, we expect Richard to be a font of knowledge about all things, and I'm sure he'll go away and beaver away at finding the answer He has a naturally curious disposition, one feels. I'm going to pass over to Richard Brinton now.
Okay, thank you again. Just a couple of things towards the end of your presentation, Richard. You gave some examples of wealth taxation that was collected. I think it was particularly in Switzerland, that was collected by cantons, this is quite interesting because we haven't actually talked about Labour policy of decentralization and devolution to the cities and devolved countries, etc., like Scotland, Wales, Northern Ireland, and so on. Their ability to raise taxes, and perhaps one of the appropriate ways of, or one of the only ways that one can be certain of raising taxes through property or land, which is probably why a tax on farms came in with the last budget and was amended slightly, which was good, I think. But I think any policy on taxation has to have an element of decentralization, devolution to, and this is very important with the aspect that cities, I think, was it Tracy speaking about Newcastle just now? I believe it was Newcastle, I'm not sure. The people have knowledge of what's necessary in localized knowledge, and it's important that not everything is decided out of London. That was the point I wanted to make there. Thanks.
Thanks, Richard. I did one in one of my last presentations. I mentioned one kind of neighboring topic, which is the German example of this the Länderfinanzausgleich, this concept that the revenues raised through taxes in the richer states within Germany are then redistributed to the ones that don't make as much money. I think that is an interesting approach. Actually, if you look at what the UK does, it's kind of the opposite, because we have this very regressive council tax system where properties in London and the southeast are undervalued, and that's depriving I mean, those councils of revenue, but it's ultimately, we don't have any kind of redistribution mechanism at all. It's those revenues go directly then to the local councils. I think that is an issue. I think it goes beyond just tax as well. I think we seriously need to look at how we can make, the areas outside of London in the UK more interesting and attractive for businesses, because theoretically, if you've got a lower cost of living in a city, you should also have a lower cost of employment, which should make those areas more attractive. But I think for structural reasons, we haven't been able to see that in the UK, and the concentration has become so high that actually it's in some cases prohibitively expensive to hire people in certain industries in London, which of course just doesn't make sense. So I do agree with you. I think it's not just about tax structures. I think there's things that we should do there, and I think devolution, I agree, but I think also an active central role for government of redistribution between richer and not so wealthy areas, so specifically from London to maybe further up north. But that's a very big conversation as well around devolving government further, and really how you then structure any forms of tax, because council tax wouldn't work for that because it's already managed by the local council. But yeah, very interesting, I think, topic to open up.
Thanks, Frankie. Is she there?
Come in, Frankie. Or
yeah, I'd like to follow up on that, Richard, actually, because I find it absolutely fascinating that in Britain, where you have such disparity between regions, in fact, it is the most unequal country, I believe, in Europe, Britain. Britain. How is going to devolution work if you can't bring some sort of balance in terms of wealth creation across the different regions? How, and I sort of think I disagree with you, but I'm not sure wholeheartedly about government having that sort of central directive role, because I think devolution will only work if it's really devolved. But how is it that you enable the Northeast, for example, or the East Midlands to develop a viable economy when it is so behind in terms of economic development? The government, in fact, maybe I'm saying something against what I've just said, the government is going to have a huge problem in enabling those huge disparities of wealth to be able to be leveled out to enough of a degree that devolution actually means something to people in terms of having local power. If they can't do it, they don't have power. If the government can't manage that equalization of wealth across different devolved areas, then it's not going to work.
Can I add a comment? Because I think this raises, opening up these aspects raises another important general question, which is that when people talk about the impact of taxes on enterprise and wealth creation, that's only half, broadly speaking, half the picture. One needs to talk about the capacity of government to structure investment and indeed spend to provide the things to ensure that by a combination of public and private agency in the economy and distributed around the country, that businesses, wherever they may be located and of whatever type they are, get the inputs and have the framework of inputs that they need to actually be able to get anywhere. And that these devolution type structuring issues do raise this even more general question about looking at the cost. And I'll just give one little example that, for example, of this is that because we've gone through a period in Britain of a good 15 years now, where the investment in infrastructures which are not just of benefit to citizens privately in their lives, but essential in different aspects and in different degrees, of course, but structural to the wealth creating capacity of the UK, has been undermined. And it's been undermined on the basis that less tax for enterprises encourages enterprise, but that's only half the picture. So we're reminded to sort of come back and look at both sides of the picture. And the devolution issues really raise that very sharply.
Yeah. So I would say 2 points there. I agree with you, actually, Valerie. I would like to see more devolution, and I think the UK is extremely centralized in comparison to many European countries. I spoke in one of the last sessions about the percentage of local spending which is actually managed by central government and by local governments in the UK, which is it's very skewed in the UK in international comparison. A lot of local spending is still nationally steered, which I think is wrong. So the first point I'd like to make is we do need to devolve more power over spending choices in a county, for example, or within a city to local government. I agree with that. But in order to fund those changes, I do think there should be, on the other side, some kind of transfer taxation, which is overseen by central governments to redirect funds or surplus funds from the wealthier areas of the countries to the poorer ones. So to make them more concrete, yes, devolve more spending powers to the Northeast, for example, then also make sure that they're getting subsidized effectively by the more productive areas of the country, like London. I think on your point, Tim, that's actually very much in line with Mazzucato's philosophy. So she's written a few books on this idea of the entrepreneurial state and the idea of crowding in investment, right? So yes, you need to create incentives for industry to start up, and incentivizing through tax can be a part of that. But government also needs to create the framework for industry to want to take risks, and that's, I think it's not actually a problem just unique to the UK. I think it's something that's quite prevalent in Europe, that we don't like to have these national champions. We don't like to make a big bet on a single company or a single industry. It's been historically, let's make a big broad basket and try to be fair to everybody. And in the end, we end up with a bunch of companies that can't compete on the global stage. They get beaten out by companies from the US, who then grow much bigger. And then we end up contracting our work out to them instead, and we end up with the worst of both worlds.
Yeah.
I don't think that's unique to the UK, that we have that issue. And I would agree with you. I think one concrete point on this, which was raised by the CEO of Octopus Energy, and I think this was a very interesting point that he raised. He was campaigning last year, and I think it was turned down by government, for regional electricity pricing. So the idea was that at the moment, if you have a wind farm being built up in Scotland, you've got to pay for that electricity to be brought down to London, essentially, where it's being used. And the price in the UK is the same wherever you are. But if you would have some kind of regional pricing, which then shifts the cost for the transport of that electricity to the people who are actually using the transport, so down in the south, then you could have theoretically pockets of the country with very cheap electricity because they're close to a wind farm, for example, which of course incentivizes everywhere in the country to build more renewable. Because they are then going to directly profit from cheap electricity and not have to pay themselves for that transfer cost of moving electricity around the country. Something like that, I think, would be a nice idea to incentivize private investment by saying, hey, here, we, the UK government, are going to build renewable energy, or whatever, in the North Sea. And we're then going to create an industrial zone for businesses to come in, and you're going to benefit from cheap electricity, which is thanks to state investments. And you can then pick a handful of industries that you want to support through programs. I think that is a more kind of comprehensive industrial plan that has not been thought about as of yet.
Yeah, I mean, thank you for that response, Richard. I mean, it's to talk about mobile assets and land tax, which was Valerie's response earlier. I mean, it's one reason why in UK to Zero, for example, to blow our own trumpet, we're so keen on investment in local industries and industrial activity, economic activities that are tied geologically, for example, to a particular area in terms of heat. It doesn't travel, but it can generate a lot of economic benefits to a locality, and contribute a lot to decarbonisation nationally. And it actually develops a lot of economic benefits and uplifts localities that have, as people like to tactfully say, been left behind. It's like forgetting children, isn't it, really? I mean, leaving them behind in the market. Anyway, that was a bad example. I'm tired. Apologies to the world. So I think that investment in economic activity is brilliant. I mean, look at what they've done in Hull. They invested in money in one large chemical plant in the industrial area, in the industrial park there, to recycle its heat, and now it's distributed around all the nearby enterprises, and it reduces all their overheads. Yeah, so it enables them to do more, and it goes into local homes, so it increases demand, and it does it all locally. So there are different ways in which we can actually motivate and incentivize and finance local activity in this way. I'm going to duck out of any repercussions to what I just said, and go straight over to Richard Brinton.
I just wanted to come back about Richard's comment and say I strongly disagree about variable pricing of electricity. just because it's produced in one place cheaper than somewhere else. Just in the same way that because say doctors prefer to live in London or Edinburgh, that somewhere else that they don't get the medical assistance they need, or the teachers or whatever. No, that doesn't work in a society where we're striving to create some sort of equality of access. So access to electricity or whatever should be at a universal cost to everyone in the country. Although perhaps one should be looking at the pricing, but that's to do with electricity. I think that there's something wrong with the pricing there. The other point, coming back to the devolution and decentralization, this is all to do with Gordon Brown's New Britain in a way. Constructing a different Britain that actually is where wealth is distributed more evenly away from the southeast. And we are going to have. Let me do a little promotion for Professor Gallagher's presentation. That we will have the person who is responsible for writing the large part of the report of the Brown Commission's findings. We will have a presentation of that coming up in April. I'm not sure now.
13th.
13th. Thank you, Valerie.
Anytime.
So I think that would be very interesting to see what he's got to say about balancing Britain through decentralization and devolution to regions and cities in Britain. Right. Thanks.
Thank you very much, Richard. That was a very well-timed bit of promo there. Well done. Am I going back over to Tim and Valerie now? Or have you just not taken your hand up?
It's
Timothy.
no, it's back up again.
Timothy.
Just following up the recent comments, I think that it's possible to combine different aspects. We should always remember that it's possible and perhaps advisable to combine different aspects and dimensions of taxation if you want to get the best effects, for example, in terms of how the state, how public responsibility can provide a structure within which individual and corporate actors can work to their own interest in a way that's consonant with the public interest. And I'll give an example, which is that it relates to France, surprise, surprise, because that's where we're talking from. And it's to do with their transport policy. In France, there is, but it's just one example of a general sort of thing that could be applied in other areas. France charges nationally a mobility tax on businesses apart from the very smallest businesses. Right? It's not a large tax, but it's in percentage. And to be honest, I can't remember at the moment whether it's in relation to their turnover or their employment. But it's the taxes paid in recognition of the fact that businesses depend for their existence on the ability of their employees and the goods and services they produce to move about. And it's a necessary form of investment. And they have chosen to single this out rather than just saying, oh, it's a slice we'll take off general taxation. Now, the interesting thing about this is, in terms of the issues that Richard Brenton's raised, is that it's a national tax, but it's collected and able to be spent locally.
Yeah.
That's right. And it's played an important role, though, in the agency, qualities of agency able to be exercised by local authorities in France, whether they're big or middle-sized. Obviously, the smallest ones don't really have the same kind of capacities for mobility investment, but in the largest ones, it's a big issue. So, and it's encouraged a number, this tax, having this income, has encouraged a number of important French municipalities to move their own mobility policies towards the direction of better public and cheaper public transport facilities, which then also allows them to constrain, in some cases, as they choose, car use in congested areas without having a congestion charge and the costs of administering it.
That's right.
So the localities, so if you like you take Montpellier as an example, which is developed over 15 years now, nearly, a policy of such investment in mobility. Half of the costs of it have come from this nationally determined mobility tax. The other half have had to be raised from local taxation, from what we would call in Britain, what used to be called the rates, and that, so that's a political issue, but the political issues have come into a different proportion, and local agency has been able to be more, which is devolved, has been able to work in a different way because it's been combined with a local collection and distribution of a nationally determined program. So when we think about, not just in terms of transport, when we think about these sort of issues in Britain, we should remember we can combine different structures and instruments.
But they don't.
Yes, I was indeed going to say, I forgot when I did my clean heat promo, that every area in need of a boost should have a Montpellier.
Yes, yeah.
Because that sort of thing is brilliant for distributing economic demand around an area, for mobilizing people, for socializing people, for getting them to different areas. And it's a brilliant way to attract people and investment to your area. So
yes, it's lots of the two groups of people. Most people are happier in Montpellier with these sort of policies, and especially because health benefits. There are health benefits, but the two groups of people who are particularly happy are the young, those who don't have young enough not to have an established independent income, but the second group, which is also very important, are businesses. The businesses are delighted with the results of these mobility policies because they were always paying the tax before, but now they get benefits.
Because young people want to work in Montpellier.
Young people want to come to Montpellier so that the companies can recruit, they can move their goods around and the services around the city more easily. Their costs are lower, and for many businesses, they get a lot more business. Like the services, the so-called, leisure or entertainment sector people get more business.
That's really interesting. I think that also is the kind of thing we could put into emotion, Tim, because I think that's anything that we've got really nice international examples. So you've got first-hand experience. That's the kind of thing I think we can bring, very strongly from a Labour International perspective. We're uniquely placed to bring forward those ideas.
Yes,
yeah,
and nice. Zoran Mamdani's win in New York was partly on the back of his free bus transport.
Yeah, that's
and
true.
we were there when he got the idea. Labour International helped his people get the idea from
Nice.
Montpellier.
Didn't know that.
So we've all been involved in this.
Yeah, super. Yeah, I mean, I noticed that actually every time I'm in the UK. I mean, if you're not in London, the public transport is noticeably worse than in Europe. Yeah,
Certainly cost-effective worse.
Yeah. I'm afraid I have
it's-
to jump out, everyone. But thank you for a lovely discussion. Please